All right, what's up, guys? So, earnings season is starting to kick off here. We've got a lot of the big banks reporting earnings today and into next week. So, I thought this would be a good time to review the sectors and the markets overall and just where I'm going to look and where we want to look for the best earnings plays. Because we know that we can just find these random earnings winners and probably make some money, but you can make a lot more money by knowing where to put your money, and that's going to be in the most performant sectors overall. So let's start off by looking at growth versus value. So what you're looking at here is a price relative chart of IWF and IWD, which are the growth and value ETFs respectively. A little about this plot so you can understand it. For any given day, if IWF outperforms IWD, then you get a tick to the upside, and if it underperforms, you get a tick to the downside. Okay, so what we're seeing here is growth actually topping out here, and I've drawn this trend line to show that it's been downtrending but holding on to this support zone around 138, 140, and it really started to break down, and this would indicate that value has been outperforming growth. So growth is like your tech stocks. It's really what everybody likes to trade. They're more fun, more volatile, etc. The value stocks are going to be like your financials, your energies, your industrials, that kind of thing. And we started to see this this change in character around late January, early February. Growth kind of took a nosedive in comparison to value. Growth has put in this little bounce here in the last 2 weeks in April up to this resistance level. So this is really where we want to start our research. Is value going to continue to outperform growth, or is this bounce, is this just going to run into this resistance and roll over to indicate that value is going to be the leader throughout the rest of the year, or at least the mid to short term, or is growth really going to reclaim this level and start to outperform the rest of the year? We don't really know, but what we do know is that it's at an important level right now. So until growth picks back up above this 138, 140 level, we're going to focus on value. Okay. The other thing on this chart is this gray line. This is a 200-day moving average, which is an indicator for a long-term trend. If it's above this gray line, it's an uptrend. If it's below the gray line, it's in a downtrend. So that's another bearish indicator here for growth stocks in general. So let's take a look at the sectors. For this, there are a couple of different sites that I like to use. One is FinViz. If you go to finviz.com, they have this groups tab, and you can group it by sector. Here I have it sorted by performance year to date, and you can see the top, four out of the top five sectors here are value, right? So you've got energy, financials, industrials, and basic materials. All value sectors, all of them double digits and greatly outperforming the growth sector. So, I mean, take a look at energy. It's up 22% this year compared to tech, which has historically outperformed. It's only up 8%. I mean, 8% is a good return, don't get me wrong, but this is where this kind of analysis can really play in your favor. Like, you can make money investing in tech, but you can make double your money or more investing in financials or energy, right? So this is where we want to focus, up here in the top five. So all these are value. And you can use this page to see who's moving today. So energy's up, basic materials are up, financials, industrials. Okay, all value sectors. Okay, so this is just um, confirming or reaffirming our thesis that value is where we want to put our money. Another site that I'll show you here real quick. This is Koifen. If you go to this market dashboards section on the side here, I've just selected U.S. sectors, and they have this list here. Just kind of shows the same information. The difference here is this is based off of the S&P 500 sector ETFs. So here's that list. This is a widely followed list of sectors. A lot of people just use this list of ETFs as the barometer for each sector. So I like to look at this as well. You can see XLE is energy, XLF is finance. Really the same kind of thing. The top 5 here are your value, and you can see this chart over here. It looks kind of messy, but if you hover over one of these, like XLE, you can isolate that one and look at it that way. Just another way to view the sector performance. You can also go over to earningswinner.io. This is my website that I built. If you come over here to this little pane, this is like a mini watch list view. It defaults to earnings today, but I also have this sectors list, which shows you the S&P sectors, and just a little more information on what an S&P sector is. So this XLE being energy, this is going to be comprised of all of the energy stocks in the S&P 500. And you can go back over to Koifen, and if we expand this little side panel here, we can drill into, say we have energy selected over here. We can drill into the holdings, right? So expand snapshots, click on holdings, and this is going to give you a view of all the stocks that make up this ETF, right? So all the energy stocks in the S&P 500. Right now, it's defaulted to weight, or it's defaulted to sort by weight. So this ETF is mostly made up, or at least 22% made up of ExxonMobil. And we can sort this by return. So you can see like these are the stocks that are moving this sector, at least in the context of the S&P 500. So another a cool way to kind of look under the hood of the market and the sector, and really see what's moving these different segments of the market. So let's jump back over to Earnings Winner. Same kind of view over here. We've got the sector list. If you just want to see like what's moving today, you can do that here. So let's take a look at the watch list today. We have presets for earnings today. I can add a column. Let's take a look at sector, and let's just look at company name as well. If I sort by sector here, you can see all these finance stocks are reporting earnings today. And it's kind of mixed. Let's take a look at the big ones. Goldman Sachs, nice earnings announcement today. We can take a look at the headlines. Over 3% increase intraday, and you can drill into these and see, and here's a video here. You can see what all these people have to say about it, what the media is talking about. So this is what I'm going to look at. I'm going to take a look at these finance stocks. I'm going to take a look at the ones that are up strong from the previous close, which is your percent change. And I'm also going to look at the ones that are up strong from the open, which is this column, percent change from open. And if this looks to close strong, I'm going to add this to my post earnings watch list, which of course I provide to anybody on this site for free. All right, just go to watch list presets, and then go to post earnings long. And this is my curated watch list. I update this every couple of days, maybe once a week when it's slower. But this is kind of where I like to start. So we know we want to look at value stocks. We know we want to look in finance, energy, industrials, that kind of stuff. So what you can do over here on the earnings window side is you can build a new screener to do just that. So let's say, let's build a new screener here and let's look for stocks in finance. Okay. And let's pull some columns in here. Let's do earnings time, earnings date, and let's do sector. And we'll just do like a company name just so we know what we're looking at. And now I'm going to select the date range for the next 2 weeks and update. And this will give us a list of all of the finance sectors. Okay, it just took a minute to load, that are reporting earnings over the next 2 weeks. Okay, so this is a rather long list. You can you can export this and save it as a watch list so you can keep track of it. You can do that for each and every sector, or you can save this as a screen, right? So this can be finance next 2 weeks. Okay, so now we can just keep an eye on all these stocks and look to trade these as they start to report earnings. So if you sort by earnings date, you can see like Bank of America is reporting tomorrow, BlackRock is reporting tomorrow, Citigroup. So we've got some really big Schwab, some really big finance companies reporting this week. Finance is performing really well, as we know. It's looking to put in some new all-time highs here. So this is a good place to start. So what I would do from here is just, I'm actually going to jump over to Trading View, and I'm going to get rid of this chart because I'm done with it. And I'm going to pull in this list that I have and I kind of keep track of every day. And let's just take a look at some of these top sectors and look at their overall charts. Energy really had this big run here over the last 6 months and stalled out here at resistance, right? This prior support zone before the COVID-19 meltdown really turned into resistance. So we topped here and it's pulling back and consolidating. Does this continue higher, or does it continue, to downtrend like it has been long term? We don't know. Okay, so maybe the party's over for energy, maybe not. Not sure, but this isn't really the strongest chart in the world. So unless it gets above 55 and really starts to put in an uptrend, I don't know if it's worth putting our money in the energy sector for at least for this quarter, right? And we may need a couple more months for this to develop a bullish trend. As opposed to finance, where it put in all-time highs back here in January, pulled back, and just continued to rip higher exponentially, really. And we had this pullback recently, and now we just put in a new intraday all-time high today. So super bullish on financials. Earnings, if those big companies are reporting well this week, this could really propel the finance sector into another one of these face ripper breakouts. So you can look for earnings plays in this sector. You can buy XLF outright. You can also buy the leveraged ETF, which I've been buying since way back here at this support zone. I mean, me and my partner were buying this down here in the 63s, and I mean, we've been profiting all the way up. And I still have some shares of this. So those are a couple of different ways you can invest in the sector. This is XLB. This is the Materials, again, this is a fantastic chart. Really strong uptrend since last April, and we're pushing all-time highs, right? So we definitely want to keep this sector in mind when we're scanning for stocks. XLI, same story, really strong uptrend. We had some basing here at the end of 2020, really into February before it started to kick up with other value stocks, or value sectors rather. And it's just uptrending, putting in new all-time highs. So definitely want to be looking to invest in XLI. This is another one that we've been trading at the earnings winner desk. We've been trading DUSL, which is the 3x leveraged version of this. You can see all these trend lines because we've been analyzing this, for over a year now, and we're buying in here, we're buying in this dip, and profited pretty much all the way up. Utilities, nothing really interesting here, just a sideways choppy chart. Healthcare, also kind of choppy, but also kind of uptrending. It'll be interesting to see if it can break out above this resistance from January and put in new all-time highs. We'll see. This could be interesting. If we get a breakout on this sector this quarter, this could be a sector worth checking for earnings winners in. Consumer discretionary, this is the sector that is composed of stocks where you buy things, right? Like your jeans and like all kinds of things when people have extra money. That's the sector that represents that. So like if you're in a really strong economy, money's flowing, this sector is going to take off. And it really put in this nice gap up and this rip here. So consumer discretionary, definitely a strong long-term chart. That's something that we'll want to look at in our scans as well. Staples, consumer staples, this is more defensive. You can see that it hasn't rebounded quite as much as the other sectors. It's still trading near its all-time highs, but not real volatile, and really, I don't know that there's a whole lot of upside potential here. Same with real estate. There's really no reason to buy this chart. It's nearing resistance, and it's just ugly. Technology, this has been on a massive uptrend pretty much since last April, the COVID bottom. And this is probably the biggest representation of growth stocks, where we kind of hit a top here February and stalled out and pulled back quite a bit. Lots of people panicked, and it's just been chopping around for a couple months with no real trend or range really. And then just as growth started to heat up here in the last couple of weeks, it really started to rip. And tech is always nice to have on your side, but if it's underperforming value, then you're better off putting your money, in financials or energy. Whether that trend continues, we don't know. So definitely want to keep it in mind if this rip continues to move higher. The last one is XLC Communications. This has been a really strong sector. We had this dip here that people were buying, and some consolidation, here for a month or two, but generally uptrending. It's been really choppy with the overall markets. Had this dip with growth and then this rip with growth. And it's just kind of consolidating near the highs. Whether or not this continues, I don't know, but it's typically been a strong sector. So I'll put it in the category of, maybe I'll buy some earnings winners in this sector, but at least for now, I want to focus on the value sectors.